Hey, good morning. Happy Monday. It's September 15th, 2025. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. Quick shout out quickly first to the one and only Mickey Lang. That's my dad. It's his birthday today. I know he's not listening. It's 5:30 in the morning, but happy birthday, Dad. Number 87. Great. Great. And hopefully Mom's going to give you a nice celebration this afternoon. I'm still here in lovely Long Beach Island here, Surf City. That's why I played that song today. So as we get started with a big week in the markets, we have a Fed meeting obviously this week. Some of you may be looking at the screen and saying, what the heck happened with the futures? Well, basically the futures moved from September, and there is a differential between the S&P 500 cash and the future. That's the reason for that is due to the interest rate. Currently is about on the Fed funds. So there is a premium to be paid on the futures as long as rates are up. So if rates pull down, say to like, it's not going to get there, probably 2%, 1.5% or something like that, you won't see that huge differential between the cash and the futures. So a little something for everybody to learn there today. So we see volatility has come down quite a bit. We're down about 15.3% on the VIX, and S&P futures up a little bit this morning, up about 16 handles. Looks like the S&P 500 is going to be opening up in record territory again today. NASDAQ up about 35, Dow Industrials up about 100 points today. Those indices also going to be opening up in territory. Russell 2000 just getting there. It's almost there. About a point and a half away from an all-time high, 240.63 or so on the IWM. It's going to be opening up about 239 this morning. Not a whole heck of a lot to talk about this week in the Fed meeting, and we do have a big options expiration to shake markets around a little bit. So I know a lot of people are wondering, is this Fed potential rate cut already priced in? And if so, is the market going to sell off? And my answer, as always, to that question is, I don't know. You don't need to know, right? All you need to do is follow the price action, follow what the market sees from there, right? You could certainly make some bets and some trades on its downside protection. Certainly, puts are rather cheap right now. 15% volatility means that the options are cheap. Calls. If you're betting on more upside, certainly you can buy some. And again, the market is not pricing in very large moves this week, so you can certainly cheap too. As I show you the S&P 500 chart here right now, we see 50-day moving average. It's well above the 200-day moving average, which is about 50. Looks like about 5,900 or something like that. So it's about 10 above the 200-day moving average. That's a rather extreme stretch. It doesn't necessarily mean that it has to end right now. Remember something, conditions are not signals. The difference between a condition and a signal is that a condition can last for quite some time, whereas a signal is a trigger for you to act and take the appropriate trade. So in other words, if we hit a peak and top and we roll over and we follow through on that rollover, well, that's your signal to go ahead and add some downside protection. But we haven't received that yet, right? Every single look at this chart of the S&P 500, every pullback has been accompanied by a rally off of that pullback. So it's just been in higher lows all the way up since April. So listen, you know what? You just have to go with what the market is telling you to do, right? You don't need to tell the market what to do. And I've constantly told people for years, if you try and tell the market what to do, you're going to lose. The market will give you plenty of information to tell you how to proceed and how to move forward, how to move accordingly. All right. So we're seeing a little bit of strength this morning in Tesla. Tesla is something that a name that was pretty active in our chat room last week. I had bought some calls on Thursday, sold them early on Friday. Made a huge double on those. Some other players in the room other traders in the room bought some calls for this Friday, and the stock is up, gosh, up about 25, $30 right now. So up almost percent right now. Fantastic move for Tesla today. We'll see if that follows through. I read something as well too, and I think somebody put it in the chat room that Elon Musk was buying stock in Tesla last week. So you got to think that he's feeling pretty about the future for that company if he's buying stock. Nvidia's down a little bit this morning. I think it got a downgrade. Microsoft's working its way higher as well too. So I think as we move into the end of this week, we have the Fed meeting, which starts tomorrow. It will end on Wednesday with a policy move. I think the market is expecting, and I'm expecting as well too, a quarter-point cut in the Fed funds rate, down from 4.25% down to 4%. And that is not likely to move rates too much because the rate market has already moved in front of this meeting. But what's going to be interesting to hear is Chair Powell's comments in the press conference, and also the words from the statement. In addition, the projection materials are going to be coming out again for September into 2026. So the last couple of projections which came out in March and June, we're projecting 2 rate cuts by the Fed in 2025. And of course, we haven't had any so far. We have 3 meetings left. This week, we'll have one in October, and then another one in December. So the concern here is that the Fed only does 1 cut and says, wait and see the data for the end of the year. The data is starting to look much more favorable to rate cuts. And if the Fed is going to follow their mantra of, we'll let the data tell us what to do, I think that certainly a second rate cut is in order. Whether it's October, whether it's December, it really doesn't matter. But I certainly think that the Fed's projection of 2 rate cuts is probably going to be spot on. If the jobs market gets a little bit worse, if inflation continues to come down, I think that gives the Fed much more ammunition, much more weaponization with interest rates to cut a 3rd time, maybe this year, or perhaps they just wait till January. I think that over the next 12 months, we're going to see rates probably come down to about 3%, maybe 3.25%. So from here, that's 4 rate cuts, maybe 5. We have 8 meetings between now and next September. So not every meeting is going to have a cut, right? There's going to be no movement, so forth. And this is only predicated on the fact that inflation is starting to come down and down towards the 2% goal. St. Louis Fed President Moussalem did say that he thought, he and colleagues on the committee thought that inflation was going to hit their 2% late part of 2026. So that being the case, they should probably get down to their goal on the Fed funds futures. And what is that goal? Well, Chair Powell said it's about a 1% premium above inflation is where the Fed funds target is going to be. So if inflation's 2%, add 1% to that, that's 3%. We're at 4.25 now. There we go. We get to my 5 rate cuts by maybe the middle or the late part of 2026. So that's going to be interesting to pay attention to today. We have this week, we have FedEx coming out with earnings later on in the week. We also have a big options expiration coming up on Friday that's going to create a lot of volatility. And again, once I told you early on in the program here that futures have rolled into December as of today. So that's going to be it, everyone. I appreciate everyone spending a little bit of time with me today. I will be back at the home base on Thursday, on the 18th. And we'll chat again about the Fed, about the decision that was made on the prior day. And I look forward to seeing you guys all then. Good day, and a little bit more of Jan and Dean as we go out. Take care.